The essence of trend following lies in the fact that you have been following. We know that whether we are doing long-term or short-term, the reason for profit is because we are doing the right trend for a period of time, and where the market trend will go, in what shape, and at what speed, we usually only know fully in hindsight. But if we can keep up with the pace of the market, we can make good gains even with the benefit of hindsight. As a result, the theory of trend following has become an investment method recognized by many investors, and many of them have made profits with this method. The core essence of trend following is that you have been closely following the market, always only half a step slower than it, never go to predict its next step, just keep following, did not lose even if you win. A moment's rise or fall has nothing to do with the trend. The fundamentals are just a far-fetched explanation after the fact. Money is just a string of chips in the numbers game, but you can afford to let go. So, in your heart, eyes will only trend. Grasp the trend, so get rid of the pain of the trap. Trading is a number of games. When you have a trading system, feel trading is quite boring. Every day is to watch the computer to see the signal. There are signals on the operation, no signal on the waiting. Watching the money figure up and down, inadvertently one day will find themselves into a million or millionaires. Do not think that the ability to make a profit trading system can guarantee that you will be successful in every transaction. Any profit is made by the loss of a small profit composed of large. Any trading system has weaknesses and losses are inevitable. For a trend-following system, it does not require that the number of profits be greater than the number of losses. It only requires that small stops be used constantly to find large profit opportunities. Such a system requires the user to be prepared to accept small losses. For high-frequency trading system, he is more focused on the pursuit of the number of times the number of profits is greater than the number of times the number of losses, his pursuit of accuracy. So investors in the choice of trading system, it must be clear which system is suitable for them, and not blindly choose. High-frequency trading requires investors to pay close attention to every move in the market. Fluctuations is the source of its profits. There cannot be any interference in the transaction. The trend of trading is the opposite. It taboo carefully staring at the disc. Carefully staring at the disc will destroy its overall grasp of the trend. Fluctuations is the source of its losses. It only need to pay attention to the market trend whether to change can be. But most of the investors in the market are using the way of carefully staring at the market in an attempt to obtain trend profits, which leads to their inability to grasp the trend. The essence of systematic trading is to deal with what is happening, not with what will happen in the future. It trades based on trading signals rather than predicting the market. However, there are many people who are spending too much time dealing with what is going to happen in the future and are overwhelmed by what is happening, which leads to his inability to trade effectively. He always wants to be ahead of the market, but ignores the reality of the market, thus leaving his trading in a state of illusion and lacking a basis in reality, which goes against the very nature of a trading system. Correct trading ideas are a prerequisite for the use of trading systems. In the system in the loss period, do not easily think that the system needs to be changed or replaced. The loss is a normal phenomenon, must be accepted. At this time should tell themselves how to improve the ability to deal with difficulties and patience. In the system's profit-making period, do not be clever and think that you can use your own trading ability to improve the efficiency of the system. Discipline is more important than anything else. Difficult times in the system can improve your trading ability and can test your self-discipline. For system traders, it is not the rise or fall of the market that matters, but the execution of the trading signals, as the system's trading signals often contradict your view of the market. A lot of trading opportunities will be missed in the investor's hesitation, which also leads to the use of the same trading system. The trading results are very different from the key. The market, whether up or down, the system at the critical moment will send out trading signals. Seriously implement the trading system, can greatly simplify our trading, so that trading is more simple and effective. This is the fundamental reason why trading systems are so important. First of all, there is absolutely no such thing as a perfect methodology. You have to choose between a bear's paw and a fish's paw. More timely, more sensitive signals will inevitably lead to more false signals and more stop losses, but more stable, safer, more reliable signals will inevitably have to give up a large part of the market. System has its pros and cons. In the long run, by and large, various methods and systems of the effect and yield are comparable, so the method or system is not a problem at all. The problem is how to adhere to the system and do a good job of position management of the funds, to prevent a person from succeeding in all the things in the heart. Experience determines emotion, emotion determines behavior, and then the good method system also have losses, and is often applicable losses, and these losses experience is difficult to make a psychological normal people indifferent. Watching your losses occur regularly is too much for any human heart to bear, but you have to accept them. If you move in a small way, intending to deviate from your system in future trades to avoid losses, or trying to close a position early to lock in a profit, I guarantee you will miss out on the real opportunity for significant profit later on.